Welcome to Within the Frame, where we bring today's most pressing issues across the globe into focus. I'm Kim Mo-kyun. South Korea's economy faces growing uncertainty following President Yoon Suk Yeol's brief martial law declaration and the subsequent ongoing impeachment efforts leading to increased market volatility. The Finance Ministry's latest report warns that while inflation remains under control, domestic and global risks could dampen economic sentiment. Amid this, opposition lawmakers passed a drastically reduced 2025 budget of $471.5 billion, cutting funds for key government operations, including the presidential office and national security. This budget squeeze raises concerns about the government's ability to manage state affairs in the coming year. For a deeper discussion on this, we're joined by Yang Jun-sok, professor of economics at the Catholic University of Korea. Welcome, Professor.
Hello.
And also joining us from Chicago is Greg Buchak, professor of finance at Stanford Graduate School of Business. Great to have you with us, Professor.
Thanks for having me.
So let's start with Professor Buchak. Amid rising concerns over the political situation here in South Korea, how do you assess the immediate economic impact of the recent martial law and the political crisis?
Sure. Well, as you know, I think sort of the remaining uncertainty is mostly around kind of the political process of what happens next to President Yoon and the outcome of the impeachment vote, kind of in contrast to what might have been a much deeper crisis around the fundamental stability of sort of South Korean democratic institutions at the time that martial law was declared. So, in some sense, I think you can see this as the rule of law working as intended. It's a little chaotic. There's some volatility, but I think this situation is much better than the alternative. Economists have sort of shown that, having stable political institutions, they're very important for economic growth. And kind of the basic idea there is, businesses want to know that contracts will be enforced, courts of law will work, the government won't expropriate private business. And if there's a sign of these sort of basic institutions breaking down, that's really bad news for the economy. When the crisis first started and sort of right in the immediate aftermath, markets were sort of trying to figure out whether it would really be kind of this worst case scenario where Korean institutions sort of broke down. And as a result, this was unfolding live. There was a lot of volatility in equity markets and foreign exchange markets, just as sort of the world was trying to figure out what was going on. But it really seems like this worst case hasn't materialized. The impeachment process is working through kind of normal democratic channels. There's some uncertainty around what's going to come out, but I would sort of characterize that more of like the same uncertainty you would get with an election rather than a sort of fundamental question about whether the rule of law will be followed.
Now let's also ask Professor Yang's opinion. Cho Dong-cheol, the president of the Korea Development Institute, said on December 11th that the negative impact of the martial law and the impeachment crisis on the economy is limited and will not last long. And this goes in line with Professor Buchak's statements. Would you agree to them?
I would agree partially. I think any negative effect from the martial law itself has pretty much disappeared. Now, during martial law, it really didn't affect anything about the real economy, production and exports. Factories were not shut down. People were not arrested. No one was hurt. So in terms of at least the real economy, there was nothing from the martial law to really affect the real economy side. But I think all the danger now comes from the political side. Because the impeachment vote did not take place, there's real question on the legal standing for President Yoon. Even though the party and the army said that they would no longer take orders from President Yoon, legally all the powers still rest with him. So I think there's a real confusion on where the leadership is and what the legal standing is. And right now, the political conflict between the ruling and opposition party is growing. Now, if we can get this problem sorted out quickly, then I think the risk will be minimized and there will be little effect from the martial law declaration. But if the political confusion goes on, then as the longer it takes for the political problem to be solved, the bigger problem it will be. It will eventually affect the real economy, production, and export side as well. Having said that, even if the problems from the martial law and the political problems go away, Korean economy was not in a very solid place to begin with before the martial law. So even if we go back to sort of the pre-martial law normality, it will still mean a pretty gloomy outlook for the Korean economy.
Then what about elsewhere? Professor Buchak, how much do you think the latest political turmoil could impact foreign companies and investors from overseas?
Sure. I mean, if you're a foreign company, foreign investor, even a tourist coming to Korea, you want to know that when you do business in Korea or interact with a Korean company, will the contract you signed be enforced? Will the ownership right you have in some asset be respected? Will the Korean economy remain healthy? Will it be safe for you to travel here? And I think over the longer term, Americans and a lot of foreigners in Korea definitely see South Korea as like a very stable liberal democracy. There's a big reason that there's so much trade and partnership between our countries. Businesses have been willing to invest, they're willing to sign these long-term contracts. They do that because they think there's a sort of stable legal institutions backing these agreements. So, when this martial law crisis occurred, it was very surprising for a lot of us overseas to see pictures of army vehicles in the streets of Seoul. And for those couple hours, I think a lot of people were really wondering like what's gonna happen. Fortunately, as Professor Yoon said, sort of like the worst case scenario didn't materialize, and now sort of what's left on the table is a lot of political uncertainty, and we're not quite sure how long that's going to last. I will sort of highlight what I think is, from a very outsider's perspective, what I sort of saw as a silver lining here is, yes, the president declared martial law, but the legislature was able to unanimously vote against it. And I think kind of amazingly, the president and the army went along with that vote. I don't think you can take that sort of deferring to the legislature, deferring to sort of the democratic process as something, I don't think we can take that for given. And I think that's sort of a good sign for the ability of the Korean system to work through this crisis.
Right. So now, meanwhile, we will talk to Professor Yang about the domestic stock market now. It has been fluctuating following President Yoon's public address on Thursday after showing slight signs of recovery following the martial law crisis. Now, how would you forecast the future direction of the stock market?
Okay, well, it has been surprisingly going up for the last 3 days. I did not expect the stock market to go up so soon after the martial law. I did expect the shock to go down, but it sort of did better than I think a lot of people, including myself, expected. Having said that, though, if you look at who's buying and selling the stocks, right now, Korean individual investors are selling the stocks and Korean institutions are buying the stocks. Foreigners are still leaving, though they're not leaving as quickly as what a lot of people feared. So in some sense, the stock market is recovering, but it's still very shaky. I'm not sure if we completely have the foreign investors' confidence yet. But again, even before the martial law, Korean stock market was not performing very well. And during shocks like this, it's natural that you have flight to safety. And in this case, flight to safety means US dollars and non-Korean foreign bonds. So bonds and stocks. So I think it's not really a big surprise that a lot of foreign investors have left Korea for safer stocks, at least for now. But the question is, when will they come back? And until the political uncertainty has cleared up, I'm not sure if there's a lot of incentive for foreign investors to come back. So it may be a while before we see the stock market being completely stable again.
Right, so it would be crucial for us to regain trust among individual and foreign investors. Now, lately, South Korea's currency has shown some volatility as it depreciated sharply against the dollar. It's still showing signs of uncertainty as of the moment. Professor Buchak, how would you gauge the impact of the political situation to have affected exchanges?
Yeah, I mean, I think sort of like Professor Yoon said, the broader context here is the won has been losing value to the dollar pretty steadily for the past few years, especially since last October. And sort of if you zoom out, you know, the devaluation in the wake of the martial law declaration, it's not really an outsized move in the context of that larger trend. So I think there's even one story here, which is, you know, the economic sort of situation in Korea put pressure on the president, and that's actually sort of what led to discontentment with his leadership and ultimately the declaration of martial law. Given that the martial law was sort of short-lived, you sort of might interpret this whole situation as sort of the economic situation causing the political crisis rather than the other way around. But sort of, you know, like back to currencies, a very simple explanation for why currencies move up and down is they sort of depreciate when the economy's lagging. If there's less demand for Korean goods, especially domestically, people need fewer want to buy them, and so the value declines. Markets also expect interest rates to decrease. Political instability per se can lead to these declines, and if there's a concern, for example, that sort of the government may not be able to repay its debt, and until sort of this sort of gets resolved, I think you're going to see this currency depreciation sort of stick around.
Right, so this depreciating currency has been going on even before the martial law. Then you've mentioned it's going to stick around. There are concerns about whether this high exchange rate will persist. What are your forecasts, and what potential repercussions should we prepare for?
Sure. I mean, I think again, the longer term context here is the won has just been losing value relative to the dollar for a long time. Part of this is about the strength of the Korean economy. Part of this is about the strength of the U.S. economy and relative moves by the Fed and the Korean Central Bank. In terms of a forecast, I think there's a lot of uncertainty about sort of when this political crisis in Korea will resolve. I think there's also a lot of uncertainty around what policies Trump will pursue when he takes office in January. The details of his tariff plans, for example, they could have a very large impact. And until we see actually what's in them, and unfortunately with him, we often don't sort of know what we're going to get until he decides. It could be hard to say, but we'll get there. You know, weak currency tends to be a sign of economic weakness, but it's sort of good and bad depending on who you are. If you're someone who wants to travel internationally or consume a lot of foreign goods, or if you're a business that imports foreign goods, this is bad for you. But on the other hand, Korean exporters, people who want to work for Korean exporters, a weak currency means Korean goods are relatively cheaper for foreigners, and on the margin, that's beneficial for them. So there's some pros and cons of this.
Right. Thank you for the clear explanation on that part. Now, South Korea's foreign exchange authorities hinted that they would intervene to lower exchange rate volatility and take strong action to it. Professor Yang, what kind of measures could they take, and what is the foreseen impact?
Okay, well, ideally, they would stick to reducing volatility. Right now, the exchange rate is very volatile. So let's take two problems separately. You have the volatility where the exchange rate changes a lot in a day, in a week. Then we have another problem, which is that the Korean won is right now valued very low. I think we should separate those two problems. Volatility, I think there's a room for government to maneuver right now because of the political turmoil. Depending on what the president says, depending on what the politician says, we see very high fluctuation in the exchange rate. And I think the government and the Bank of Korea do have justification to go after those temporary short peaks and troughs. But if you wanted to deal with the weak value of the Korean won, I think that might be waste of resources in some sense. As Professor Buchak mentioned, a lot of this is because of the current medium-term fundamentals, the Trump risk, the tariff risk, as well as the weak Korean economy. You can't really turn that around with government intervention in the currency market. And if we just try to work against the market, then we might just throw away a lot of our foreign exchange reserves on a task which is basically impossible. So in some sense, we should reserve the bullets, fight the fights that we can sort of win, concentrate on volatility, especially political volatility, so that the won does not jump around too much. But for now, I think we have to face the fact that at least for the next 3 to 6 months, we'll have a Korean exchange rate being around 1,400 to 1,410 won per dollar.
Right, but we can still expect some changes on the volatility part. The National Assembly recently passed a revised national budget that cuts 4.1 trillion won. This is roughly 2.9 billion US dollars from the government's initial proposal. How do you think these cuts, especially to the reserve fund and special activity expenses, will affect South Korea's short-term and long-term, Professor Yang?
Okay, well, I think we should separate the macroeconomic effect and the microeconomic effect. The microeconomic effect, depending on the programs that they've cut, it will obviously mean that some programs cannot be fulfilled. That's going to be a problem for some ministries and some programs. But the total government spending in the budget was originally 677 trillion won. About 4.3 trillion won was cut. That's less than 1% of the budget. It's about 0.16% of expected nominal GDP next year. So macroeconomics-wise, I don't think it's going to have that much of an impact. What does worry me a little bit is that a lot of money was cut from the reserves, and what the reserve in the budget does is it's sort of insurance. In case there's a big emergency, in case there's a national disaster, or if the country goes into a recession that's more serious than we expected, then they can use that fund from the reserves to try to quickly pick up the economy. But if you cut money from the reserves, then you obviously don't have the resources to do that. You will have to form a supplementary budget, which is not necessarily a bad thing, but the problem is that takes time. So the budget size as a whole, I'm not particularly worried about that, the 4 trillion won being cut, but there's the reduction in reserves does bother me a little bit. But on the other hand, Korean budget has been rising very quickly in the last 5 years or so. So this hopefully may lead to a slower growth path for government budget and perhaps a smaller deficit than what we've seen in the last few years.
Right. So just as you mentioned, the opposition stated that if necessary, additional funds can be allocated through the supplementary budgets. But now there has been controversy over the government's fiscal soundness. How would you view the government's financial capacity in this regard?
Okay, well, the expected growth in nominal GDP is 4.5%, and the rise in spending was 3.2%. So a lot of people are arguing that this is in some sense a contractionary move on the budget. But on the other hand, if you just look at the inflation, then the expected inflation next year is about 2.3%. So it does represent increase in funds. Even with the budget cut, I think this will be the biggest nominal spending that Korea has seen for the annual budget. So it's not a small budget by any means. Originally, when the government formulated this budget, they expected 2.9% deficit against the GDP. So this was right around the sort of the upper limit that the government has set for itself. They wanted to institute a budget rule that deficit cannot go above 3% of GDP. But again, I think hopefully the cut in budget will start a trend so that the government can start reducing the deficit and reduce the debt. Korean government debt, while it's not that bad by advanced country standards, has been going up at an alarming speed in the last few years, and it will go faster because of the demographic trend that Korea has. And hopefully they will learn to, because some of the reserve funds as well as some programs are cut, hopefully the government will start using this money more wisely.
Right, and before we let you go to Professor Buchak, what kind of policy measures do you think the South Korean government should adopt to stabilize the economy in the short term and regain public and investor confidence given this current situation?
I mean, I really think the number one most important thing for them to do is just resolve this political crisis as quickly as possible, get a stable government in place, take questions about who's in charge off the table. And that's really first order questions of economic stimulus and so on. I think, as Professor Yoon mentioned, it's sort of a small fraction of the overall Korean budget, and the stable institutions is really number one.
All right. We'll have to wrap up our discussion now. Thank you so much for your insights, Professor Buchak and Professor Yang. We appreciate it.
Thank you.
And that'll be all from us on Within the Frame. Be sure to tune in next time as we continue to explore the stories that matter. Until then, stay informed and engaged.